Yes, hello. Welcome back to our channel, which is KMFX Wave. Sorry for the last few months. Medyo naging busy lang kaya ngayon lang ulit nakapag-upload and nakapag-live and nakapag-update. Now, we have a lot of time to update the market and also to teach my favorite or one of my favorite strategy, which is Elliot Wave that you can use in three different markets or also in different markets, or shall we say in different markets, because we can use this in metals, stocks, crypto, and forex. So by the way, um, this is matatawag natin to, or we can call this a um, structure of Elliot Wave, or this is our lesson one, first day of our um, lesson for the complete lesson for Elliot Wave. Okay, now we are now in BTC channel. Okay, so structure natin for ang topic natin for today is structuring. So ang kailangan nating unang hanapin or yeah, una nating hanapin sa isang market is yung pinaka lowest point niya or tinatawag nating the zero point. Okay, ito yung sample, which is the BTC monthly time frame. So ito yung sample structure niya. Later magpapakita pa ako ng iba't ibang structure. Now, dito muna tayo sa structuring, which is imagine ano niya lang, um, kung tinatawag natin is architectural structure niya. Okay, wala pa yung complete structure or the market structure itself. Okay, ang Elliott wave is meron siyang 5 waves. Okay? Now, meron siyang rules. Okay? So una, kapag hahanap ka, sorry, ingay ng dog. Una, kapag hahanap ka ng isang market or magbabasa ka ng market, ang pinakauna mong gagawin is hahanapin mo yung lowest point or yung tinatawag nilang zero point. Sir. Okay. Ito yung tinatawag nating zero point. Now, meron tayong 5 waves and meron tong rules. Okay? First is wave 1, wave 2 does not uh, does not touch or retrace 100% of wave 1. Okay. Masyadong malaki liitan natin. So, this is the wave 2. Okay, ito yung tinatopic natin. Itong wave 2. Yan. Now, hindi daw siya pwede mag-retrace ng 100% ng wave 1. Okay? So, ito ang 100% ng wave 1. Mm-hmm. Okay. Ito yung 100% ng wave 1. For example, ito yung zero. Okay, lagay natin 0. Example, this is the 0. Okay, this is the 0. Dito nag-umpisa. And matatapos siya is 100%. Okay? Ito yung 100%. Now, hindi siya pwedeng mag-retrace 100%. So, kapag pababa siya, so example, ito is 30%, 40%, 50% is kalahati, 60, 70, and 100. Hindi siya pwedeng dumikit kasi yun yung 100% niya. Dito, so, simula nag-umpisa. Okay? So, ang retrace niyan, or pwede siyang bumaba at least 60% ng inangat ng wave 1. Okay? So, mas matatopic natin to sa susunod na topics, which is din tayo sa Fibonacci or tinatawag nilang or what they call is golden ratio. Oh, sorry. Now, the another rules is wave 3 is not is the strongest and steepest wave and cannot be the shortest. Okay. Ito ang sinasabi nating wave 3. Okay? So, ang wave 3 is the strongest and the steepest wave and cannot be the shortest wave. So, yes, wave 1 can be the longest wave but the wave 4 to wave 5 must be shorter than wave 3. Okay? So, for example, this one. He can be the longest wave, for example like that, but wave 5 is shorter than wave 3. Then we can have this also. Um, Wave 5 uh, uh, can be strongest than wave 1, but or wave 3, but wave 1 must be shorter than wave 3. Okay, but my experience, based on my experience on trading, wave 3 is always be the strongest and the steepest and the longest wave among these impulses. Okay, what we call impulses again. Later we will topic that. The next is wave 2, wave 4. Sorry, wave 4 cannot uh, exceed wave 1. Okay, ito here. So here's a line. For example, the wave 2 impulse now to wave 3. And wave 2 is finished and now our current wave is now in wave 3. Now we are expecting wave 4. So wave 4 can be lower than this, this, but cannot be exceed. Okay? But it can be touched. Touching is acceptable. Okay? So that for example, this is the difference of wave 4 and wave 2. Wave 2 cannot be touched because it's retraced, but it is already considered retraced as 100%. But wave 4 can be touched but cannot be exceed in price territory of wave 1. Okay. Excuse me. Okay. And wave 5 is the last wave, which is sometimes I did not I did not trade this wave because this is the last wave. I'm waiting now for corrections. Okay, now what is correction and what is impulses? Okay, so here's the corrections. Let me change the color. Lahat ng way, all the top is what we call is impulses. Okay? Wave 1 is impulses, wave 3 is impulses, and wave 5 is impulses. Okay? So let's type this. Wave 1, 3, and 5 is what we call impulses. Okay? Now next is this is what we call trend. Okay, so we always look for the trend. So what is the trend? The trend is uptrend. Okay, the trend is uptrend. Now, wave 1, wave 3, and wave 5 is the best friend of the trend. Okay, now wave 2 and 3 is against the trend. What we call this is against trend is correction. Okay, wave 2 and 4 is against the trend. What we called is correction. 2 and 4. Now, this is the basic structure of Elliot Wave. Now, usually, um, people or trader uses this Elliott wave for long-term investment, or what we call, sometimes they use this as a swing. They trade this as a swing, but you can trade this also in intraday. But for me, it is not effective if you were going to use this in scalping. Okay, it's better to use some indicator if you're going to use in scalping. Also, there is an some of indicator that agrees with the movement of uh, Elliott wave and support the Elliott wave. Then also it can there is just like MACD, they can support your entry and exit through reading of the market of Elliott wave, and it can help you to decide if you're going to entry or exit in the market. Okay, so this is the basic structure of Elliott wave. Now there is a lot of topic that we can tackle in the next video, just like um, types of impulses. There is a two kinds of impulses, the ending and the at the beginning, or the leading and the ending diagonal. So that's the two kinds of impulses. Another thing is we have a lots of correction. This is the correction as you can see in the in our screen. Wave 2 and wave 4. They are against the trend. Okay, so I'm going to put an arrow. Excuse me. Here you go. Okay, wave 4 and 2 is against the trend. Sometimes people avoid this movement. It's because we have a lot of kinds of corrections. There is a there is a very critical situation that we can call is complex correction. So we cannot read the market through that complex corrections, but we can trade that through safety and truth by our experience. But if you're a newbie, I'm not recommending you can that you will trade this complex correction. But through experience and to practice to through practice in the market. Okay, so you can predict, or you can forecast what we're going to make it happen. What kind of corrections that the market could make, or it can be complex. It possible it can be a complex correction. Now you can exit in the market as early in your profit, but still trading this still required a risk reward ratio, which is w- sometimes what we call 1:1, 1:2. Risk money management. Okay, we required risk money management, which will be tackled in our next video. Okay, now this is the structure of the market. Okay, so if you can see after this wave, what will happen? Okay, after these 5 waves, what will happen in the market? You think we will have a basic correction. It's just like this. It will have a basic correction. So this is the basic structure of the market. Okay, so wave, if point zero, if the lowest point, what we call is point zero, or the start of the market. Okay, so here in wave 5 we call is termination point. Point T, what we call is point T here. Okay. Or the point P or termination point, which will most of the traders taking profits. Okay, this is the point where we are going to get our profit. In the next video, with the leading diagonals, with the kinds of in the next video, in the next is the kinds of impulses, the two kinds of impulses we will tackle. Okay, where we going to put our stop loss and take profit. Okay, now the question is what will happen in the market after this five, or this, if it is the if the market completed this structure. Okay, we will going to have a new wave, wave one and wave two, which we will have a bigger wave. How? It's because here in wave 1, we have a small wave here. Mm-hmm. It's use screen. Here in wave 1, there is a small wave which we can see in the lower time frame. For example, this time frame, the white five waves, or the white labeled. Okay, it is we are now in monthly time frame. So this green, you can see this in daily time frame or weekly time frame. So what we can see here in um let's change the label. Yeah. So what we can see here in wave 2, or in the correction is wave 2, is also a small correction just like this. Okay. It's also a small correction. Let's get read the box so that you can see properly. Yeah. So also in wave 3, we have a small wave. This is where you can see a multiple entry in the market because of this. And inside of this, of wave 1 green, there's also a small 5 waves there, which you can see in 1 hour time frame. For example, this white 5 waves label, and white 5 waves is a monthly time frame. The green label is, you can see this in daily time frame or weekly time frame. There is a small wave here inside of this green, which you can see in 1 hour or 4 hour time frame. Then in the slowest time frame, which is monthly or seconds, there is also a wave. Okay, so that's why you can trade Elliot Wave in a multi time frame. You can good use multiple entry if you are really good, or you have a really good experience within trading. So this is what it looks like in the market. But this is a reminder, but this is just an idea. Okay, or the idea, or the structure, or the architectural structure of Elliott wave. Okay, so it does not mean this the market is looks perfect as like this. Okay, so this is the basic structure, or the basic structure of idea. I will not label this correction because um we have a lot of kinds of corrections. We have zigzag, we have a triangles, and etc. We will tackle that in the next video. Okay, in our next topics. Okay, let me erase this one so that you can see clearly. So here, wave 4. Let's we have a recap. This is the basic structure of the market. Inside of this wave, there is small waves, or we can call a this is a major wave and a minor wave inside of it. Then inside of the minor wave, there is a microwave that you can see inside of this small wave, and you can see that, or you can count that in a lower time frame. Okay, so next is there is a lot of corrections, which you can see in against the trend, which is wave 2 and wave 4. Wave 1, 3, and 5 is what we call impulses. Wave 2 and 4 is what we call correction. Okay, did you follow? So, wave three is the strongest and the steepest wave and cannot be the shortest of the three waves. Wave four cannot be exceeded in the price territory of wave one. It can be touched, but it cannot be exceed. Sorry. Wave two does not touch or retrace the 100% of wave one. So this is the rules. You can screenshot this or save this so you have a future reference in the market. Also, trading in Elliot Wave also follows the news. Okay, so it is important that you could mix it with your fundamental. It doesn't mean that you're trading Elliot Wave. You are going or you are not going to look for a fundamental, and you are going to be 100% technical. It's good to follow as a confirmation. For example, we are now in wave 5. We have a good run, for example, in the global market, in Forex, crypto, Bitcoin, gold, etc., silver. Now, we are looking for a short. Okay, what we call short is downtrend. What we could some other called long is for the uptrend. Short is for the downtrend. Okay, by the way, for example, uh, we cannot predict or we cannot forecast the end of the trend or what we call point T. Now, for example, in our situation, we have a recession, which is we're looking for the recession or within the news as a confirmation that this possible our run is now in the point T, and we are now entering now in correction. But now in our situation, we are now in recession. Almost all stocks, crypto, and forex now is down. No, but USD CAD, USD CHF, USD JPY is flying high. They're going now uptrend, and we make a lot of sorry, we make some um profit there. Okay, but we are not. What we are looking now is the end of excuse me the weakness of or the recession in US. We're now looking for the recession or the effect of recession in the market, which is in the USD. Okay, the strength of the USD is possible near to end, and we are looking for the gold for the buy. Okay, but still the gold is we have a the last wave, what we call we are now in the last phase in correction, which is this one. We are now in the last phase into correction, and when we reach in the last phase, which is wave C in correction, we will buy here in wave C so that we could start now a form of new wave. Okay, so in the next the future topic, we will also topic mapping, which we will monitor which structure are we. It is important that we know where are we in the market than reading the market without a map. Example, we should know where are we in the market. That uh, for example, this is a lot of waves inside here, so possible it make us confused. Are we in a micro? Um, are we in a micro wave, or are we in a minor wave, or are we in a major wave? So we don't know where are we now. So it is important that we are looking now in. It is important that we are looking now in the market or the market map. Where are we? It is very important. Okay, so I'm going to delete this and show you. Sorry, some Elliott Wave markets. Let's go first. This since we are now in the BTC. Let's see here in the BTC. Mm-hmm, mm-hmm. Wait, this is weekly. Mm-hmm. Let me refresh this one. Yeah, here. So as you can see, we have a small waves inside that I label it, but you can see that clearly in the lower time frame, which is weekly or daily. But now we are in a monthly. Then we have a major waves. This is one, two, then three, four, and five. So now we are now here in small waves. This is what we call the golden ratio. Okay. So as I can predict in the lower time frame, let's go in daily here. So as you can see here in the lower time frame, we have a what we call zone or support. Sometimes people call this support as resistance. This is what we call flag. So as I can see in the market, we will go down more in BTC here around 14747 or maybe 12K. Yeah, this is the lowest that I can predict, 12K. So for people who into cryptocurrency and looking for a buy in cryptocurrency, don't buy yet. But if you can trade in the short or um, if you can trade in short, you can make it short. But as my advice, you can just wait to end this corrections. Then you can invest your money so that it will be more safe. Some people call it buy low. Okay. Let's see an update in Xiao USD. If you can see, you have a five waves movement here in our market. Okay, this is impulses in correction. We will tackle that in our corrections. There is a lot of corrections here. As you can see, there is XWXY. This is what we call complex correction. This is what we call triangle, and this is what you call the last base. Or in total is this is what we call is um, regular flat, the basic correction. Okay, as I can see here, let's move this golden ratio. We have a flag here which we will expect more down here in gold. But as I can predict now, and gold, or as I can forecast, the gold will be end here in this line. More possible this, but I can predict this here line, here in this line, because as I can see in our chart pattern, it will form as a double bottom. Okay, it looks like this. This is the potential of double bottom. Here you go. Yeah, this is what you see. We will have this topic in the future. Okay, so if you can see here, this is the possible double bottom. And if it is complete, this is what it looks like. Okay, so this is the neckline, that what we call neckline. Yeah, this yellow is the neckline. Let's move it. Yeah. So if ever I will going to buy here in this area, but some people they wait to break this channel line or the neckline, and they're going to wait for the reset of the in the line. Then they're going to buy here within this area. So as I consider this as a wave two, they're going to buy in wave two. But as an Elliot Wave or Eliticians, I'm going to trade here in this area so that I can capture all five waves. So see the advantage that you can read in the market. You can buy low in the market, and you will plan your trade, your entry, and your exit. Okay, so I'm going to show you um some example of I'm going to show you some example of planning. Okay, from the first, this is the planning of the XY here. So I have a plan. So it looks more complicated than in the structuring because we are now in the market. But through experience, you can through experience you can do this also. You can read the market just as like this, and you have a plan just like this. So for example, so what's your plan? Your four major pair: GBP USD, USD USD JP, AUD USD, USD CAD USD CHF. We can sell in the XY. If we see a bearish engulfing candle, which is Japanese candlesticks on the orange star here. Okay, means buy confirmation for Xiao USD. Xiao USD is gold, and sell confirmation for USD pairs, USD XXS, which is these pairs. Okay, now is the safest entry to break on in the breakout confirmation. Xiao USD sell confirmation for USD. Here is the breakout. If it breaks here, you can now sell and wait for this and buy. So this is why I'm supposed why I'm posting this, because the fourth wave cannot be short and sharp as this here, the fourth wave. And so I'm making my plans accordingly. In the next 4 to 6 months, there is a 90% probability that the XY will remain in this area here, within this area. I will make my trading plan for major pairs accordingly. So this is the advantage for trading Elliot Wave. You have a plan ahead a month ago. Okay, so trading scalping or intraday is very complicated for me because you're just waiting for your entry, or you have a lot of you will going to spend a lot of time looking for your monitor just to enter and trade. Just like unlike in Elliott Wave, you have to update your trading a day just for 30 minutes if you're really good, or you're really um memorize how to label the market. You have to open your monitor just for 10 to 15 minutes just to update the market, and you will look for we are now in a buy low, or I should go for the sell. I'm at ahead. You already planned for your trade or for how to make money. So this is now just for our topic for today. So let's share screen. Let's go back and so this is okay. Your JPY, by the way. I'm going to share this in our already here in within this area. So okay, your JPY is already here in the area because I already posted. I already updated market that look this arrow. Okay, so there's no green. This green is from yesterday trade, or this candle is yesterday trade. So as you can see, it already touched. This is ABCD. Sorry, I did not label. Okay, so this is what you call support, which people call this a zone. Some people call this a zone, and this is what you call triangles, or some people call it trend line, which you can see the support and the trend line meet or cross within the zone. People call this as a high area of high confluence. Now I'm going to short this on Monday, or I'm going to sell on Monday in Euro JPY. Okay, let's look for H. Here you go. Oh, it already sold in the lower time frame. Sell confirmation in the lower time frame is already confirmed. So I'm going to sell maybe on Monday. So this is the only topic that I can talk. This is the our first topic, which is the structure and the examples of Elliott Wave. So please subscribe and share our channel, and so that you can see or follow, and also click the notification bell so that in the next topic for the Elliot Wave you will be noticed. Okay, that's all for now, and thank you for listening for our first topic, which is the structure of Elliot Wave. Bye bye for now.